right, so thanks for joining today's panel. My name is Larry Cermak. I'm 30 years old, and I'm the CEO of the blog. Unfortunately, I'm not the CEO. I'm research director, as the MC just introduced, and I'm also a little bit older than 30 years. Now, that being said, just for housekeeping, let me provide you some additional information. So usually I learned that at conferences there's some reverse signaling going on. So those who are most senior dress most casually. But for me, this is an exception. I just learned shortly before that I would be moderating this panel. This is why you see me a little bit in a less official attire. If you want to see me in better attire, you can join another panel tomorrow, which I will moderate then. So let's dive right away in. My name is Marcel Blum, working at the blog. Yeshu hua idian dian zhongwen, nikui zhao xiaoma, gongzuo zai the blog. And so we will be talking about ETFs today. So this has been in the mouth of everyone. What are the flows? How does this influence crypto prices? And that's what we will be talking about. So I would like to, my panelists to give a brief introduction of themselves before we dive into the discussion. Maybe we start with you, Gary.
Morning. Bright Sunday morning. Everyone all awake, have had your coffees. I'm Executive Director at OSL. We were the first to become licensed as a crypto trading venue in Hong Kong. And the reason why I'm sitting next to Tom is because we are also the sub-custodian for a lot of the crypto assets that are currently sitting under the first batch of Bitcoin and Ethereum ETFs launched in Hong Kong this year. As a trading venue, I guess we also what we also represent is actually the sort of like the new age of crypto in Hong Kong. It's fully regulated, fully protected, fully transparent, and we hold the view, and we've been holding the same view, that regulated crypto is really going to be the direction of growth in the future for this sector. And Thomas.
Thank you, Foresight and OSL, for the invitation. My name is Thomas Zhu. I manage digital assets and family office at China AMC Hong Kong. China AMC, the Chinese name is Huaxia Jijing, is one of the largest mutual fund asset managers in China, and we're the largest ETF issuers in Greater China. And it's a great honor to launch the Bitcoin and Ethereum spot ETFs on April 30th with strong support from OSL, and happy to discuss more today. Thank you.
Hi, good morning. My name is Andre. I'm head of research for GMCI. GMCI is a joint venture by the blog and Wintermute, and we create crypto index products. So we have our crypto flagship index, which is the top 30. We have several sector indices, and yeah, I'm excited to talk about ETFs and crypto in general, and yeah, great to be here.
Okay, thank you guys. My name is Chen, and personally I have been in crypto since like late 2016 to early 2017. And I'm currently the director of digital assets for Foresight Wealth. And Foresight Wealth is a fully owned subsidiary for Foresight International, which is part of the Foresight Group. And Foresight Group has been having crypto exposure since 2015, 2016. And as you guys probably know, we're one of the early investors for NEO and for Ontology and all these Hong Kong-based projects. So we're not a new player, but probably to a lot of people's surprise, a lot of people say, oh, like when did Foresight start to do crypto? And but we have been involved in the space for a pretty long time, yeah. Oh, but great to join the great panel. Thank you.
All right, thanks for the introduction. And so let me right away go to the first question, which I would like to get your feedback on and discuss it. So what has changed in the cryptocurrency market since ETFs were approved that wasn't there before? And furthermore, are inflows mostly new capital? Let's start with Thomas.
Sure. So I think the launch of the spot ETF is the IPO moment for Bitcoin and Ethereum, not only just in the US, but also in Hong Kong. I think it's important to have such product for retail investors to have easier access to the Bitcoin and Ethereum. Traditionally, they would open an account on a crypto exchange, and they may need to remember the password. And if they trade on the decentralized exchanges, they have to remember their wallet passcode. However, after we launched the ETFs on Hong Kong Stock Exchange, the investors can trade using their traditional retail brokers. And through the retail brokers, they can get easy access to the product, just the same as they trade stocks. In addition to that, the securitize of the Bitcoin and Ethereum provides additional flexibilities to creating new products, such as some of the structured products. And also there are brokers providing the margin financing for the ETFs. So those are the unique aspect that the Bitcoin or the Ethereum both don't have on the traditional crypto platforms or decentralized platforms. And because of the easy access, we see a lot of the investors coming from many kind of different categories. From the retail investors, obviously you saw that on the exchanges. We actually traded over 200 million Hong Kong dollars on a single day last Monday, which is by far the highest volume among all the products, the virtual asset products in Hong Kong. And also that beat many of the large traditional stock ETFs on that single day, which is a great surprise to all of us. And we also understand that because of the easy access, many people can trade that easily during a volatile time. Besides the retail investors, since I'm managing the family office, I meet a lot of the ultra high net worths. They all indicated strong interest to such product. Many of them came from a very wide investment kind of portfolio. They probably invest in some very exotic product, some VC or PE. So they are familiar with risk, right? So understanding the risk of the Bitcoin and Ethereum is very important when you're allocating the portion of your portfolio to such asset. So those family offices, the question is not asking why to buy the Bitcoin or the Ethereum, is when and what price. So I think that is an encouraging sign to many of the, I think people in the audience here are more OGs, right? So you want a new capital coming into the space. I think those new capital, especially ultra high net worths, are very open-minded. And the last bit is institutional clients. We saw that the hedge funds are playing this instrument very actively during the recent volatility period, and also during some of the geopolitical tension period and also macro event. So people trade that as a subsidize to the traditional asset, especially when you saw the NASDAQ is close to all-time high, although it's corrected a little bit, but still the valuation is not attractive. And besides the hedge fund, we're also talking to some of the longer-term investors. Potentially, I think in the long run, with the regulation and the acceptance internally at those firms, hopefully the insurance companies, the sovereign money, the banks, in the long run can also allocate to this asset. And we saw that in some countries and regions, but not yet in Hong Kong. So we look forward to working very closely with Gary and OSL to educate the market and to bring more long-term investors to the space. Thank you.
Great, yeah, thanks for those insights, very interesting. Would Gary, Andre, or Chen like to add to this, to the points that Thomas already made?
Sure. So my point of view is things didn't happen in one night, and it's not like all of a sudden like all the ETFs just came live, right? So let's trace back to when I first joined the industry back in 2017. That was the first time that Bitcoin and Ethereum got firstly recognized by the traditional finance by adding the future products to CBOE and CME, right? So since then, money started to gradually flow into the whole crypto industry. And the other milestone is actually pretty significant is in 2020, the FASB actually changed the accounting principles in 2020. That actually, from that point, all these institutional investors were able to join the industry. Because previously, if you ask like a general accountant to kind of put crypto in their balance sheet, they actually don't have any idea to do it, how to do it, right? So after 2020, they changed all the accounting principles. That actually made grayscale to happen, and MicroStrategy to join into the industry. That made Tesla to actually acquire more than 1 billion worth of Bitcoin, right? So then it happened in like 2023, 2024, that the whole ETF stuff. So the whole industry gradually converges to traditional finance, and it did not happen in one night. A lot of people think, 2024 is actually like a big move for crypto, but it's actually not. It's actually one of the milestones that actually the crypto industry is progressively converges to traditional finance, and we see that trend to continue actually in 2025 and beyond. So from our point of view, and as Thomas has already mentioned, market investor education, like we have to promote the underlying assets to more people to help them to understand the volatility, how to safely keep their digital assets, and how to access the market at the lowest cost and stuff like that. So that's actually one of the most important responsibility for us, right? So yeah.
Thanks.
Maybe I'll throw in a few as well. So I think on the one hand, we've got ETFs generally as an instrument, but in Hong Kong, the spot ETFs, why do we put so much focus on the spot element? And one of the features that we see in Hong Kong is the idea that you can actually inject your assets directly into the fund as an investor. So this feature so-called in-kind subscription or in-kind redemption. What it actually means is if I'm a Bitcoin holder and I want to so-called swap my interest for a Bitcoin ETF, that process is now in place firmly in Hong Kong. Now, what that means is there's sort of like this interchangeability or substitutability, if you like. So if I'm holding my, let's not look at it as Bitcoin. Imagine if it was some other kind of instrument. I can swap the same, I can swap my interest in that instrument into different forms now. I can hold it as Bitcoin on the public blockchain, or I can hold a security listed on the Hong Kong EX that actually represents the same economic interest. That to me is hugely powerful. And behind the scenes, and I guess if we want to sort of put a name to it, sometimes we describe the current era that we are living in now as sort of like this movement towards Web3. This is not moving from Web 2 to Web 3. This is like moving from pre-Web to Web 3. Because ETFs on the Hong Kong EX, they're not young. Let's put it this way. So overnight what we've seen is actually this ability to actually take a Web 3, the very symbol of Web3, which is Bitcoin, and actually swap it into a financial instrument in one of the oldest names in financial institutions in Hong Kong. And if we actually dive a little bit deeper, and I totally agree with Chen, this is not overnight. This is something that has taken years to happen. So, you know, for Hong Kong EX to actually now be offering a Bitcoin product, that in itself is years in the making. But behind the scenes, it's also master custodians, brokers, 2 regulators in Hong Kong, both the banking regulator and the securities regulator, actually coming around after about a 5-6 year journey to actually not just to recognize that there is something to regulate, but that it's also desirable to regulate it, that we actually want to regulate it, we want to launch more products in Hong Kong, and we want to actually do it in an exciting fashion. So I think those things for me in the Hong Kong spot Bitcoin and Ethereum ETFs, these things mean a lot for the Hong Kong sector, not just this year, but sort of for years to come.
All right, thanks. And Andre?
Yeah, I completely agree. I think this move has been coming for quite a few years. But for me, what it has brought to the industry is legitimacy. So we now have the stamp of approval by the SECs all over the world. And I think for me, that's a huge point. We have gotten a lot of attention also. So now we have Larry Fink and David Solomon, the CEO of Goldman Sachs, on every US news outlet talking about Bitcoin. We have US presidential candidates talking about it. So this in itself puts a lot of spotlight on Bitcoin and makes it also easier to explain to my friends and family why I work in crypto, you know, because the last years that has always been negative publicity. So what about FTX, or what about like some criminal stuff surrounding cryptocurrencies? So now for me, that's also, you know, a point of we have been legitimized as an asset class, and that's a huge step forward in my opinion.
All right, so yeah, thanks very much. And I think we have set the ground for the following discussion. I will skip one of the questions that was prepared, because we already know there are new inflows, who are the ones that are coming in. And so Gary, you mentioned that there's this important difference between those ETFs in the US and those here in Hong Kong, and one of those differences is that there is this redemption in kind here in Hong Kong, which is seen by many as an important advantage. Now, this leads me to another big difference between the ETFs in the US and here in Hong Kong, which is a gap in size. So there is some speculation, there's this market size gap between Hong Kong's Bitcoin spot ETF and that of the United States, and that still exists. So what do you think are the main reasons for that? And how do you think will this develop going forward? May we see a shrinking of the gap there? And because you brought up this point, I would start with you for this question.
I would also love to, later on, I would love to hear from someone like Chen as well, because obviously as a wealth management platform, I think he may have more to share. But so just a bit of background, I do come from a TradFi background. I used to do derivatives and funds from a product issuer perspective. What I think ETFs in Hong Kong generally over the years has faced is the market incentive system in Hong Kong generally have not helped ETFs to grow as a product sector. So in Hong Kong, financial products, especially when it comes to, for example, funds, structured products, typically between the issuer and the end investors, there is sort of a very rich layer of intermediaries: brokers, banks, private banks, retail banks, etc., etc. Those intermediaries make a lot of money from distributing financial products, and the commissions for distributing financial products can be quite nice. It's a good source of revenue, and so. What we sort of have in Hong Kong is the incentive system typically does favor unlisted products, because the middle layer makes a lot more money. So in contrast, ETFs is an exchange listed instrument, which means you can execute it, you can buy and sell it the same way you can buy and sell any other stocks. Now, for anyone who trades equities, basically equities brokers in Hong Kong and also around the world we're talking about a few basis points of commission. That's very small in comparison to 1 to 2% of selling commission that you get from, for example, selling a fund, selling a structured product. So I think the incentive system in Hong Kong is one of the reasons why ETFs do have a bit of a hard time growing as a financial instrument. I think the other reason is for Bitcoin and Ethereum, or the crypto ETFs in particular. I think there is still a bit of a bias for example, in the eyes of the regulators and also in the eyes of a lot of financial institutions, that somehow Bitcoin ETF is just this unique class of risk that you need to be extra cautious about. And when we talk about risk, it's all relative, right? So for example, why is that more risky than trading an equity-linked warrant or a CBBC or trading any other type of volatile or potentially sort of more high-risk instrument, including small-cap stocks, right? So do brokers have special obligations when their clients trade small-cap stocks? The answer is no. So why should it be the case that when their clients want to trade Bitcoin ETFs, somehow we have to launch a big headline about it? So just as a point of comparison, well, as a point of reference. So I think earlier this week there was a big news coverage from one of the virtual banks in Hong Kong. Big news saying that they now allow their clients to trade Bitcoin ETFs. It's like, whoopee. It's like that's just another security. It's just like any other ETF, any other security listed on the Hong Kong EX. Why is that a big song and dance? And I think that one is actually a good reflection of there is still a little bit of a bias that somehow, because you've got BTC written on it, then somehow this financial instrument carries this special class of risk that we're not used to seeing in the financial markets. That is just totally not true. So I think the two reasons in summary, I think would, to me, explains part of the gap. So the incentive system inherent in Hong Kong financial markets, and also I think we're still sort of working hard to grow out of this sort of inherent bias against crypto or BTC as a financial asset.
Thanks for those insights. So Chen, yes. Could you add to that?
Sure. So I think Gary just covered like most of it, but from our point of view, first, I think there just lack of dealers and brokers to participate in the market is because the whole Hong Kong market is actually consists of three major participants, right? Like first is like the Western institutions, and second is the Chinese institutions, and the third is Hong Kong-based institutions. So from these three group of participants, obviously, like the Chinese brokers and dealers, they're not allowed, or they choose not to deal the product. So if you go onto Futu or Tiger Securities, like if your KYC is actually under mainland China, you are not even able to search the ticker of the ETF. So and that's the current situation for all these Chinese based brokers and dealers. And for the Western financial institutions, they don't have the necessity of dealing the products. Is because they are able to acquire more fees and incentives and all, and there's actually easier access to the US ETFs. So they don't have the necessity of dealing and selling the Hong Kong-based ETFs. So basically, the main market makers or the main participated dealers would be the Hong Kong-based broker dealers, and but the market share of these participants is like pretty little comparing to those big two groups. So that's the first constraint of selling the Bitcoins. And second, fortunately, like I got a chance to talk to the regulators from SFC multiple times. They want to actually progress the product to like a next level, but it's the current regulations actually pulling things back from letting them to do some innovations over the product. For example, everybody is looking forward to having the Ethereum ETF to incorporating the staking factors for or the staking yield into the Ethereum ETF, but we have not been seeing a lot of progress on that topic yet. So that's the second part is, comparing to the US products itself, the Hong Kong product is actually pretty similar, or we haven't got a chance to find our uniqueness of our Hong Kong product yet. So probably in the future, we can develop some relevant products, incorporating more, for example, like indexes, right? And we can do like 2x, 3x leverage ETFs, and things like that. So from the product standpoint, there should be like more innovations and more things that set apart for Hong Kong ETFs from the US ETFs. Yeah.
Thank you. Andre, you would like to add to this gap that exists between the US and Hong Kong in terms of ETFs?
Yeah, so I'm definitely an outsider in that case. So my colleagues are the experts. We are based in Amsterdam, so I don't have any specific insights to the Hong Kong markets. But just from an outsider perspective, I didn't know about the incentives. That's really interesting. I think that will be a huge factor. But for me also, maybe the lack of regulatory clarity in China might be a contributing factor. And also I think the US capital market is the biggest in the world, so it also makes sense that it's a little bit bigger. But I think it just takes time. Institutions, they want to make profits first and foremost, so they don't really probably don't think about investing in Bitcoin as their main focus right now, especially not in a recessionary environment. So I think it takes time, and events like the recent volatility period maybe scare off some people or make them hesitate a bit. So I think it's just a natural process, and in big corporates, if you have ever worked in one, I think processes can be quite slow. You need multiple people to sign off, and if you want to have a strategy that involves Bitcoin, Ethereum, and maybe other digital assets, I think it's just, maybe we are too impatient, and I think we'll get there, we'll grow, and I think that's how the future looks like. So it's not a question of if, but when.
All right, thanks. Thomas, would you add to this, or then let us please?
Yeah, so we are extremely confident about growing the Bitcoin and Ethereum spot ETF in Hong Kong. To summarize a few points our previous panelists talk about. Number one, distribution, right? So you saw that the virtual asset bank launched the Bitcoin Ethereum spot ETF on their platform last week. However, the traditional banks have not been listing this product. We're working very hard with those banks in Hong Kong, not only just the European banks, but also the local Hong Kong bank or the bank with Chinese background. So everyone is very excited about having this product, but we need time to process that through the regulators. It took US about 8 months from January to August to allow major investment bank wealth management advisors to sell this product. And it's been just about 4 months in Hong Kong. So give us a little bit of time. We are working very closely with the distributors. Number two, about the product innovation. So it's a kind of a two-sided sword. So we have the in-kind subscription and redemption. However, that creates some concerns for those distributors and buyers to worry about whether they can monitor the KYC, the KYT, and the AML of those tokens. In the US, you don't have this problem, right? You're thinking about you're buying the Bitcoin when you buy the US listed product. However, you are using the cash to buy and you're using the cash to redeem. You're not owning the Bitcoin or the Ethereum itself. Hong Kong gives that flexibility and the opportunity to access the underlying spot product, which we will never have in the US. That creates the problem for the distributors and the institutions who never had the experience working with the crypto products to understand the custody and the safety of those assets. So we're also working on that front. I think the exchanges are doing a great job to buy insurance and to explaining how they custodize those tokens in the cold wallet and in different forms. So we need to work very closely with those distributors and the investors to understand the product feature. Lastly, I think timing is also very important. So when US launched the product, the Bitcoin is about 30, 40,000 level. And when we launch a product, it's about 60. And right now it's still at 60, right? 4 months later. So timing is very important for such product to rise, because a lot of people buy in the bull market, in the rally. That's human habits, right? People tend to be very conservative when in a bear market or in such a volatile market, right? Look at Warren Buffett. He's holding more cash, more short-term US treasuries than Federal Reserve of the United States right now, right? So that's how you think about the investors on the conservativeness right now in terms of the global financial market. Bitcoin, Ethereum, they're part of the global financial market, and they are on the pretty high volatile level. So people tend to be conservative right now for a reason. However, these things comes in cycle, right? It's very cyclical for any financial market and instruments to grow and to perform throughout the time. So we believe we need a little bit of time, and as one of the largest the mutual fund and asset managers in Greater China, we're extremely confident about this product to grow at a certain level that we all look forward to that.
Thank you very much. So we are coming towards the end of this panel, and I would like to add one last double question, so packing two in one, looking a little bit more into the future of what will happen. So one question is, how do you see the emergence of new type of underlying crypto ETFs, for example, Solana? When will we see that, and what would be the impact of that? And two, the second part of the question is similar. How would you see the emergence of index products? I think this was mentioned in the discussion here, something like the S&P 500, to give broader access via an ETF to the industry as a whole. And so I will start with Andre.
Yes, I think that's also the logical progression we're going towards. So it's also not a question of if, but when again. So I think people were demanding the Ethereum ETF when they only had the Bitcoin ETF, because they want to offer something new to their clients that other people cannot really offer. So now that we have two ETFs, Bitcoin and Ethereum, they want to offer the Solana ETF to clients. So I think if we go down the line and extrapolate that, we will end up with a market index at some point. It's not going to be 500, I hope. So we'll start in a smaller way. We have decided to go with 30 assets. We have back-tested our GMCI 30 index. And if you go back to January 2021 and hold Bitcoin and hold the market index until now, you would have been better off holding the index. Although in a bear market it goes down more, but since it outperforms so much in the bull market, it actually makes up for it. So holding the market would have been a better strategy, and I think more people will understand that. And just with ETFs and TradFi, it took a few years. Now I think mostly everybody trades futures on indices. So whether it's the Russell, the S&P, the NASDAQ, of course, local stock indices, they are by far the most popular. And I think it takes time, but we'll get there in crypto as well. And that's why we as GMCI, of course, have positioned ourselves to be a little bit ahead of the curve. That also means we need to be a bit patient. But yeah, we definitely see the trend going towards crypto index products to have also different trading strategies, but also the classical buy and hold that would make it attractive for every retail investor, for institutional investors, for SMAs, asset managers to offer that product to their clients.
All right, thank you so much. I will also give next to Chen. I would like to remind you that I would ask you to keep it relatively brief so we stay in time.
Will do. So we have already observed it's happening in Brazil, the Solana ETF a couple of days ago. So we're probably going to progressively see a lot more things coming up. But my perspective would be the ETF. The fact or the utility to the market or the effect that the ETF the event of the ETF to the market is actually diminishing, because the ETF is actually educating a lot of people to join into the crypto market, and people have all the access to join into the market through unregulated exchanges, through on-chain activities, and through wallets, through all these different access. So ETF is one of the important ones, but would not always be the dominant ones. So probably in the future, people will be more looking onto what's happening within the industry and kind of start to ignore what's happening on the ETFs, because all our attention right now is actually paid to ETF, like how much Bitcoin is being bought every night, especially from the Asia time, right? For every night, IBIT is buying a couple thousand BTC or selling a couple thousand BTC, and is actually affecting the price very largely. But probably in the future, when the driver or the engine actually is happening in the industry, the ETF will be a follower instead of a driver to the market. So that's my idea. Thank you.
Thank you. Thank you. Very briefly, Gary?
You want to know when?
Yes.
When Tom tells me.
Oh. All right. Tom, tell us
I got
today.
all the pressure. Look, we're sitting in Hong Kong right now. Hong Kong is the birthplace for financial innovations. In the last 30 years, we saw the China onshore companies to Hong Kong, the H-share listing. We saw the VIE structure. We saw the connect between onshore and offshore. So we're experiencing the fourth time of the innovation wave. So anything could be possible, right? From what we were talking about, the staking, from tokens, from RWA, from traditional asset to be tokenized on-chain, to have more exchanges, etc. So I'm very hopeful of Hong Kong to be the innovative frontier globally on virtual asset. So let's look forward to the greater innovations in Hong Kong. Thank you.
Thank you very much. Yeah, so I understand this means summer 25 maybe on the horizon. All right, so this has been a great panel, and yeah, thanks to my panelists for these very interesting discussions that we had, and welcome to today's conference. I hope you enjoy it, and you will see lots more interesting panels, and so I would like to close this panel and have a good day.
Thank you, guys.
Thank you.